In this video, we will see why timing the stock market is a myth, and we will see what you should do instead. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year, and I never try to time the market. So let's not waste more time, okay? Market timing is impossible to predict consistently. Even experts can't do it reliably. Warren Buffett is known for not timing the market, and he is often asked, how do you do? Do you time the market? I see your cash allocation going up. How do you do? No. Most of the time, he doesn't time the market. And he publicly said that nobody can time the market. Even him, even other great investors never tried to time the market. And if you dare to try to time the market, so you hold some cash, some liquidity, and you expect the stock market to go down 10%, 20%, 30%, so because you think the valuations are stretched, you think that the market is expensive right now. If you hold some liquidity, this will be a drag on performance, on your results. If it doesn't happen after 2 years, if the correction never occurs, it will be very stressful for you. You will be frustrated, and it will be again a drag of performance. And if you want to know whether you should hold some cash or not, there is a study made by Rob Vinal in his letter from 2014 saying that if you think a great crash like 2008, if you think this kind of big crash will occur in the next 5 years, yes, that could be smart to hold some cash. So if you are a pessimistic person that think that a great financial crisis 2.0 will come in the next 5 years, yes, hold some cash. If not, don't hold some cash. It's a drag on performance, and you will be frustrated, it will be stressful, it will be painful, and even experts can't do it. So why could you do it, you as a retail investor? This is a channel for stock pickers, retail investors, serious retail investors. So if experts can't do it, why can't we do it actually? This is a good question. Second point, emotions drive bad decisions. Fear and greed lead to buying high and selling low. If you are a victim of your own emotions and you think this market is high, let me sell right now because it's too high too quick. Or the reverse is true. If you think that the market is low right now, so you buy big and you panic buy, but the fundamentals deteriorate again, you have a high chance of making a mistake. If you are a victim of your own emotions, you will have some fears, some greed, you will have some euphoria when markets are going up. Maybe you will buy more when the things go up. Maybe you will sell more when things go down. You will panic when you will have a pandemic in 2020, in March 2020. You will panic at the wrong time. You will sell at the wrong time. It will be a mess. And in 2021, when everything is rosy, you will buy at all-time highs for bubbly stocks. That's how you make stupid mistakes. And especially since if you are an emotional person, don't time the market. That's how you will get burned very, very easily. So that's a good advice for you. And even if you are a rational person, even a rational person can be tempted to buy and to time the market, to say, okay, I'm feeling smart. I've been lucky before. I'm feeling smart. Let me time the market because, yeah, I'm smarter than the crowd, and I think the market will come down, and I expect a recession, a correction. Nobody cares what you think. Nobody cares if you think there will be a correction within 3 months. I'm sure you watch a lot of videos on YouTube of finance YouTubers that have these thumbnails with fire, with a major crash ahead. The market is going to crash 80%. Yeah, you make a lot of clicks if you make this kind of videos. And humans are driven to watch these videos the same way we are driven to read the bad press. The newspaper industry has understood this. You only have bad news on the newspaper. People click, people read, we are curious, and you fuel this temptation to buy high and sell low, which is not a good point for your long-term financial health. So Just be aware of market cycles. There will be ups and downs, and most of the time it's better to stay invested and not be a victim of your own emotions. By the way, if you want to outperform the market with a proven investing strategy, I've created a free guide that shows you how to do it step by step. Just comment guide below and I'll send you the link to access it on demand. Third point, time in the market beats timing the market. This is very cliche to say this, but this is very true. I mean, staying invested maximizes your chances of long-term gains. Exactly what the study of Rob Vinal has demonstrated. It's worthless to time the market for a few percentage points and then you are very stressed. It's difficult to sleep at night. It's not worth it. Just buy great businesses and hold. And my next point is about great businesses. If you focus on the fundamentals, you buy quality companies at the right price. This is it. You have the secret to long-term investing. Buying quality companies at the right price matters more than timing. Because if you buy, Visa, MasterCard, these are growing businesses, successful stocks. We don't really care if you pay a little bit when the stock goes up or down. I mean, if you buy MasterCard for 5 years, 10 years, you don't really care about small market timing stuff to about 5%, 10% drop. You don't really care. If you focus on fundamentals and companies that grow their earnings per share, free cash flow per share, 10% per year, 15% per year, 20%. If you focus on growing companies, that will make great performance in the future. This is what will produce your alpha over the years. The market timing will not produce any alpha. It will produce stress alpha for you. Stress in your body, which is not good for your health. So focus on the fundamentals, buy cheap companies, and hold. This is very simple. I know it's me. I feel really dumb saying this again and again, but this is what matters in the long term. We are not in this business to feel smart. We are not in this business to understand the complex world. We are in this business to develop our financial health for the future. We are in this business to compound the wealth. I mean, I know why I'm doing this. I love the process, yes, but I'm doing this to build wealth over decades so I can retire and play some video games or do some skiing, some golf. I want to be financially free, and this is the reason I started investing. So far so good, and while doing this, I love the process. So this is the cherry on the top. This is the icing on the cake, as you say. Okay, this is the last point. Last point. Okay, last point. Consistency is key. Stick to a disciplined strategy and let compounding work in your favor. Yeah, basically don't stress about it. If you own MasterCard, if you own great companies that you have bought at a good price, let them grow. Big, successful companies with a moat tend to stay great. Great companies tend to stay great. If you buy them and they have a competitive advantage, they can thrive for years and years, increase their price for years and years. So if you focus on quality names, S-tier investments, 10 out of 10 stocks with a driven CEO with a lot of passion and a lot of runway for the stock, you will do great. You will do great. This is a pretty simple formula, and you need to be consistent in your process, in your valuation, quality framework, etc. If you have the discipline to stick to your strategy, you will let compounding do the work, and you will let these great companies grow your wealth. And that's how you compound your wealth in the long term. So timing the stock market, is a myth. And this is what you should do instead. Have a clear plan. Don't be a victim of your own emotions. Don't try to time the market. It's too much effort. Your time is used in a better way, looking for great companies that will compound your wealth. Use your precious time, not to stress about the market, not to try to time the market, but use your valuable time to find the next golden opportunity.
If you liked this video and you want to go deeper, I've created a free guide called How to Outperform the Market with a Proven Investing Strategy. Inside, I show you the exact method that helped me generate 25% per year, including how to build a framework you trust, how to find great stock ideas, and how to build a winning portfolio. It's the same process I use for my own portfolio, and it's 100% free to download. Comment guide below or click the link in the description to access your free investing guide. Just go down there, click the link, follow the instructions on the next page, and I will email you the guide 100% for free.